David Sussman, the CEO of Valcor Worldwide, joining us. Hi, David.
Hi, Lauren. Thanks for having me back.
Great to see you. Thanks for coming back. What are some of the effects small businesses are seeing already? And I'm envisioning contractors, perhaps to the government. What other sorts of small businesses are feeling the heat right now?
Well, the SBA, according to the Wall Street Journal yesterday, are no longer funding loans to small businesses. There's going to be a backlog, and even if this thing ended today, which is unlikely, there's going to be a backlog for weeks and weeks.
I mean, that's going to have huge ripple effects if lending is cut off.
Yeah. Yeah, it really is. And many businesses need working capital. They need money to expand their business, buy product. And they're just not getting it. And the SBA is probably going to slow them down for months, not weeks.
A lot of businesses come really close to making ends meet at the end of the month. They rely on capital, short-term capital solutions, to keep running, not to mention being able to expand and hire more workers. What's your temperature on that and the effect of this shutdown on that?
Well, unfortunately, things haven't changed since last time I joined you on this broadcast. Banks are still not lending at the level that needs to be for small businesses. They're sitting on a ton of cash right now, and they're watching their money earn pretty good returns because of the quantitative easing that the Fortune 100 and the financial institutions have enjoyed through the stimulus from the Fed, which looks like it's going to continue now with the appointment of Janet Yellen. But what we are finding is that it is the small business. It is the business owner that runs a business maybe up to 100 employees, which represent a massive majority of the business out there, that are not getting the loans from the big banks.
Right.
So they have to go to alternative sources, and that's what we are finding we're very busy with right now.
And you came equipped with tips for small businesses out there how to raise and conserve cash. The first one we have here is what you're calling asset-based lending. Can you walk us through some of the pros and cons of that?
Well, unfortunately, when cash slows down, a lot of companies, they just hold on to their cash. They try to reserve their capital, and payments slow down to their creditors and vendors. And so if you are a business that is waiting for money to be paid to you, you need that money. It's the lifeblood of your business. You're not getting it from your client. You may be able to actually use asset-based lending as an option, where you can use factoring, which a lot of your viewers I'm sure have heard of, where you can actually finance the receivables to your business. And it's almost like a bridge loan situation where you are getting 1, 2, 3 months ahead in payments, and there are factoring companies that are out there that provide that as an alternative.
And what about refis?
Purchase orders.
Go ahead.
Refis on commercial real estate is definitely a good way to go today. A lot of, obviously with the interest rates as low as they are, many terms are coming due right now that were taken out in 2005, 2006, 2007 on these 7- and 10-year terms. And what we're seeing is that many of those commercial real estate properties may be underwater. I'm working on a case right now out of Maryland, and we found that they got a piece of property in 2006. It was appraised for approximately $2 million. We just looked it up yesterday, and it's been appraised at 1.3. The loan is 1.5. So what do? You're going to have to refinance that loan, maybe restructure the loan with the bank, talk with the bank about extending out the loan or reducing the interest rates. And if you can refinance, that can conserve capital for your business, which is obviously much needed today.
Yeah, good tip. And then we have here another way to bypass some of these banks and lending institutions is to perhaps consider selling a small stake or a big stake in your company to private equity.
Yeah, I mean, we're all familiar with the Shark Tank analogy today, but you have to ask yourself, is this a good match for somebody that's going to come in and take 30, 40% of my company? Management issues come into play, the politics, and whether or not you feel good. I mean, there has to be what I like to call your spidey senses. Do you feel good in your gut about working with a capital management firm that's going to maybe replace your board, maybe replace your brother-in-law who you've had as your CFO for the past 20 years, and they may not feel that he's the best person to run the company? And so there's going to be issues with that. But the positives on that is that they may be able to bring in a source of cash, which is much needed. They may be able to provide opportunities by opening doors to clients and vendors and other sources of professional services that may not have otherwise been available.
And then there are some other options, perhaps more risky options, and I haven't heard of these. Mezzanine financing as well as hard money loans?
Yeah, we like to go to those when really there is not any other option. Unfortunately, we're using more of these today than we ever thought we would because most businesses don't have a lot of options. Think of mezzanine financing as a second mortgage on your home. Most conventional loans today will go up to 65% loan to value, otherwise known as LTV. Well, what happens if you need 80%? What happens if you need 90%? So that remaining 25 to 35% that you need will go to a secondary tier loan. It may be a higher interest loan, maybe a shorter term. It may be more expensive. But there are companies that provide that. They are called mezzanine. Hard money is very similar to that. It may be in the form of a bridge loan. Maybe I need it for a year or 18 months or 2 years. It will be a higher interest rate. Now, one of the good things that we're seeing today, and this is for your clients to understand that run small businesses, do not be scared of the term hard money. I would have never recommended it a few years ago. But hard money lenders today are more conventional than they've ever been. We're doing hard money loans for some of our clients through some of our lenders. We have a categorized lender database that we use. And we're seeing loans in the 6, 7, 8% range, which is in many cases comparable to what you're seeing with most banks today.
Okay. Those were great tips. David Sussman, thank you so much, the CEO of Valcor Worldwide. Have
Thanks
a great
for
day.
having me.
Thank you for all of that. Your website is up on the screen.